Welcome back. A lot of pockets in the markets which are doing well, and metal stocks, a whole host of them are gaining in trade today. On the back of multiple news updates, Nigel is here with the analysis. Nigel, what's working for the metal names?
Well, I've got three big pointers. One is, ahead of the jobs report, sometimes there is a speculation that that number is going to be a miss. And the street loves that because then the Fed will go ahead and cut rates. So on the back of that, normally you see the metal stocks go into the event higher. And that's the case here again. So that's point number one. Point number two. There's a report that's come in there, and we haven't verified it by, by any source, but we're just going by the report. What it suggests is that the Steel Federation has recommended a merger to the Steel Ministry. What is the merger? They're recommending that three companies get merged with SAIL. Which are the three companies? Well, they are talking about RINL, they're talking about FSNL, as well as NMDC Steel. So they're saying all these three companies should get merged into SAIL. And they believe that a merger will be better than privatization. We know that the government has been talking about NMDC Steel's privatization, but they say that no, this is a better option. Now let's run you through a few details. What is the rationale that they have given? They say that it will help SAIL go to around the 35 million ton capacity that they have been gunning for by 2030. As of now, SAIL has around 20 million tons, and both these two entities, that is NMDC Steel has 3 million tons and RVNL has close to around 7 million tons. So put all of that together, if it merges, then you'll have close to around 30 million tons in a single unit. Centrum Brokering, well, they have come out with a note. They say that they believe it's positive, because the capacity goes up by close to 50%, 20 to 30 million ton. They say at peak utilization levels, the EBITDA number can move from around 13,000 crores all the way to around 20,000 crores. And more importantly, if they can do this merger, then it avoids any big capex for SAIL, which was estimated at around 80,000 to around 1 lakh crores. So higher capacity, maybe probability of better EBITDA, and also avoiding any kind of big leverage in the books. Those are the reasons that they've given. Some part of the street, though, believes that in the near term, it will be a bit of a negative, because as of now, both those two assets are struggling in an operational performance. Now, moving to the third point, Antique has come out with a note on Nalco, and they have a buy rating, and they've upped the target price a little bit to around 235. They have given three big reasons: pricing, cost saving, and volume push as well. On pricing, they're saying that the LME aluminium prices, well, it's much higher on a sequential basis as well as on a year-on-year basis, close to 11 to around 14%. On the alumina side of things, they're saying the price of alumina in comparison to what it was at the end of the past quarter, that's quarter 4, FY24, it's up by close to around 18%. So pricing is good. Second factor is on the cost side. One of the coal blocks had got commissioned and they were getting 2 million tons. Now the second coal block as well comes on stream, then they'll have 4 million tons. So there'll be cost saving because the power and fuel costs will go down. And the third factor that they've highlighted is that they have been talking about this brownfield expansion of the alumina facility, which could come on stream in the second half of FY26. And also there are talks about expanding the aluminum capacity as well. So that's why Antique is positive on Nalco, pricing, volume growth, and cost saving. Back to you.
Thank you so much, Nigel, for breaking down the entire metal rally for us. The next stock on our